Hello friends, welcome back to my channel Infinite Trade. So this video is the part 2 which you all have been waiting for. So the reason I recorded the part 2 video immediately is looking at the response that uh, you all showed for the first video, and I'm happy that I was able to deliver some uh, important and a knowledge which is useful to people, and that made me to record this video today. So like I already said that we'll be having 3 parts, but the first and the second part is what is more important in understanding the concept and taking your positions. So the third part is something which we'll plan it in the next weekend, and meanwhile during the week we'll try and analyze these things during the live market, and we can share the charts with each other in the Telegram channel, and that can clarify a lot of doubts among people, and will ensure that we all are on the same page. Okay. So let's begin this video. So before we proceed further, we'll just do a quick recap. So what did we learn so far is this is a price action technique based on candlesticks and volume bars. So what do we do here is to identify a support area where we initiate a buy trade will be based on 2 consecutive green candles with rising volume bars. And similarly, for a supply area or a resistance where we ideally plan to go short will be based on 2 consecutive red candles with rising volume bars. So with this identification, we decide our demand and the supply area. So during intraday also, when you come across any first instance of formation of consecutive candles with rising volume bars, you may consider that also as a support or resistance. So if I have to elaborate on that, what do I mean is, for example, uh, you know the market opened say 400 points gap down, and you had levels uh, you know covering the above range, and you do not have a level beyond that. So what do we normally do is we increase the time frame to an hourly chart or a daily chart, and we look back and see if we can identify any support that the market has. But in this case, we are not really interested in that. See, I always believe in one thing. Though we say that the stock market is based on history or historical price movement, but on a day-to-day basis, if you are a trader, people are not really interested on a support which has formed uh, uh, like some time back. So whenever you trade, it is always better you just keep the overall trend in your mind, and if you just read last 4 or 5 days data, that is more than enough. So you don't have to really go back to on a monthly chart and see where the support is and where the resistance is. That is not really required, because when there is a sudden up move or down move, nobody is really interested in those positions or those levels. The market will surpass it. So all that people remember is whatever happened in the recent times. Okay, so coming back to the point, so whenever the market opens say 400 points gap up or 400 points 300 points gap down, so even on during that time, what you can do is you just have to wait and see where you can identify say 2 green candles with rising volume bars. Okay, So in the first instance, if you saw this, we can definitely take a position here. Like I said, you can do a small scalping or wait for this level to form as an accumulation zone. Okay, and what was the condition that I said? So if this has to be an accumulation zone, the low should not be taken off at least for the next 30 minutes, and that considers that this place has become an accumulation zone, and a lot of people have or especially the big players have accumulated the positions here. And then after 30 minutes, if you're sure that okay, it's not broken the low, what you can do is you can take a position here and then wait for it to break out, and we'll trade. Okay, and then uh, you know once you see two consecutive red candles with rising volume bars, you can actually exit your positions here, and this will give you a fresh resistance for that particular day. And in this way you can actually make a new support and resistance if you see market opens with a significant gap up or a gap down, like the ones that we're expecting tomorrow. We're expecting a significant gap down, so in that case we can actually utilize this. Okay, and we'll also discuss that during the live market. So let's see how things works tomorrow. Okay, so like I said, the most successful entry will be post accumulation or distribution for a bigger trend. We can also enter on an immediate basis for smaller targets. So when I said immediate basis, that was this, like you see two consecutive candles, that it means that there is some buying pressure here, and you can maybe trade for a small up move here and then book your profits. So that is also possible. So I hope the recap is clear. Now let's move further. Okay, implementing this strategy. So based on a previous analysis, we will mark the demand and supply uh, area to go long or go short. Now we'll choose the ATM call and put strikes for our analysis and match it with the future charts. So what does that mean? So once you're ready for your trade in the morning, all that you have to do is looking at the pre-market, or maybe after the market opens. Some people wait for 5-10 minutes, 15 minutes, so whatever your time is, so just select the ATM strike of call and put at that moment, open it up, compare it with your futures chart, where you have marked a support and resistance, and try and put that kind of a support and resistance in your options chart too, and that will give you a range for that particular day, or at least it would let you know where you should go long and where you should go short. Okay, so that is something which I follow. So whatever I'm discussing here is something that I do, is something I'm telling you. Okay, and not necessary we have to depend on historical levels. We can mark new levels based on same concept during the day and trade based on that too. So this is something which we just discussed in the previous slide. So not necessary we need historical levels. We can actually mark new levels and trade that too. Okay, so now let's see some examples here. So this is the same example that the part 1 video had, and I'm just comparing it with the call and put options if we have to trade. So just imagine that we identified this level and we wanted to trade here. How we would have done this? So in this case, we identified two red candles, and the market immediately stopped here and retraced back to this range. So we already discussed that if it's an accumulation phase or something like that, then we have to wait at least for 30 minutes. Okay, and I think uh, one of our teammate, he asked me that something about stop loss. I don't remember the exact statement. So let me clear a small concept here, and based on that I'll tell you how I prefer taking my entries, and that is one of the reason why my stop losses are really small. So there are two type of traders. Okay, so one is a technical trader and the other one is a price action trader. Both are similar, both follow the similar concepts. The only difference is there are a lot of differences, but based on the concept that we're discussing here, I'm just telling you one difference. So imagine that this is a resistance. Okay, what a technical analyst will do is, if he's seeing that the price has crossed this particular resistance, he'll immediately initiate a buy here, and he'll put an SL here, and he'll wait for it to reach new highs. Okay, this is what technical analysts do. And what does a price action trader do? He'll wait for this level to break out, and then he'll wait for this level to retest. Okay, so when it retests, he'll buy here, and he'll just place a small SL here. So in both the case, the technical analyst as well as the price action trader both follow the same stop loss. However, the buy for a technical analyst is the range is far, and for the price action trader it is quite near to the SL, and this is how the SL becomes small. And in this case, uh, your SL becomes small and your risk reward is very favorable to you. So this is the concept that we are talking about here. So when I say that we found two consecutive candles and the market is moving within the range, so for me, I looking at this candle, I am definitely going to avoid this high. Why I'm going to avoid this high? Because already market open gap down, and this is a strong selling pressure candle, so I cannot expect market to immediately go up to that level. Okay, so what I'll do is I'll consider this particular doji, which is also a reversal candle for me at this instance, because after a doji the low was broken immediately, so this becomes a resistance. So for me this is my SL. So what I'll do is, for example, uh, let's consider this as 36487. Okay, say I don't want to give more than 50 point stop loss in future. So what is the level that you should enter it? That should be somewhere close to 36,437. Okay, so this candle almost hit 36,487. Okay, so what we are going to do is, so we'll not place SL exactly at 487, but something a little higher, maybe 490, or maybe you can put around figure 500. So let's say it's 500, 500 minus 40. So I'll prefer taking an entry at 36,450. So in this entire place, you can take entry anywhere. Okay, so this is how I decide my entry point. I ensure that my entry doesn't go beyond 20 or 25 points. And there are a lot of candlesticks patterns that I follow, and I try to what do you say, I try to, like, you know refine my entries and try to take small stop losses. So that comes with experience. But what really matters is you should be able to identify this demand and supply area, and you should ensure that your stop loss is going to be very small. So once you decided where your stop loss is, then automatically you know that if I have to just make a loss of 20 or 30 points, then this is the price where I need to enter. You just have to see on the chart if there is a possibility of getting that price. Once you know that possibility, just put that value and sit and relax. So that's what I do. Okay, so during this discussion during the week, a lot of times I'll definitely post where I'm planning to enter, and we may have a discussion based on that to get more clarification. So this is how I'll enter, and maybe after the consolidation we get this kind of a strong move. So now I'm going to show you the example on the options on the same day. So this is Okay, so this is the 27th. Okay, do we have the 27th chart here? Okay, 27th is missing. Okay, so let's not waste time on that. So what you need to understand here is this is the put option, 36,000 put option. So this is the day when I took a trade also on the put side. So this was Wednesday, if I am not wrong, because this was prior to the expiry day. So this is what I looked at. We got two consecutive green candles here. So for me, what I'll do is this candle's low or this candle's low. Okay, I'll decide that this is the low that should not be broken for the next 30 minutes. Okay, so this price is somewhere close to 440. So consider that our SL is somewhere close to 440. Market almost spent more than 30 minutes here. So I just have to take an entry considering that my stop loss is somewhere close to 440. So maybe I'll enter somewhere close to 460 or something like that. And the entry happens to be somewhere here. The market gave a breakout, consolidated here, and then gave a further move. So from 440, it all the way went up to 670. So that's the kind of momentum that we can catch if we enter in such place. Now let's look at another example. This is the 27th. Yeah, so on the 27th, I think yeah, this is the place that I wanted to discuss. So if you remember in the part 1, we discussed this place that the market broke the support and made a double bottom and made two consecutive green candles here, and then eventually went all the way up to this particular resistance. Okay, so the same thing like how we could have interpreted in a call option is here. So two consecutive green candles here. So for me, I would consider this red candle's low where I've marked this level. So this is somewhere close to, what is the price? 386. Okay, so let's say that my SL is 380 and I want to enter with a stop loss not more than say 25 points. So what should my entry price? That is somewhere close to 405. So all that I do is I put an entry maybe at rupees 400 or 405 after 30 minutes. Okay, so we saw that 1 2 3 4 5 6 7 8 9 10, almost 10 candles. Okay, so almost after 40 minutes it gave a dip until 400 rupees here. So this is where we would have entered, and it went not a very strong up move here because the market was almost over that day, but we could have captured about say 480 to 500. It reached, so we would have captured about 80 to 100 points. I think on this day I captured about 85 points, I think. So I don't really remember the exact figure. So this is how we can trade based on the levels that we marked on the future chart. And if you look at the expiry day, see, market took support here. We had this support, call option, open next day here. It fell down, took support exactly at the same place, and it started forming hammer candles here, which itself shows that the reaction of the candlesticks on the demand area, slow and steadily. So here it did not form an accumulation kind of a pattern, but slow and steadily, since it was an expiry day, the market moved up significantly. So from 386 to almost beyond 600. That's the kind of a moment that the market gave. So I hope you all understood this on how to trade based on this. So I'll tell you what you need to do in a short and sweet story. So tomorrow when market opens, if you do not have any levels on your chart, open both the at the money call and put and sit and relax. Just see if you have any levels based on any previous 1 or 2 days movement wherein you can mark a resistance or support. Say you get a resistance but you do not have a support because the market open gap down. So all that you have to do is wait for the consecutive green candles to form either on the put side or either on the call side. So wherever you get, you mark that as a support and sit and relax. So looking at call and put together gives you an understanding that where you can see the demand. Is it on the call side or is it on the put side? So based on that, we take a trade, and how to take a trade and how you can maintain a small stop loss. I already gave an example. I hope these things are clear. I do not want the video to be too big, so I'm trying to wrap it up as soon as possible. So I think that's it within this video. If anything that I've missed, while recording something, there is a possibility I may miss things, but in case if I come across anything like that, I'll definitely cover that in the part 3 video or in any discussion in our Telegram channel. So from tomorrow I'll definitely post some examples based on this. I hope you all enjoyed this video and expect the same love from you all and the appreciation, so that it keeps me motivated and I can bring a lot of content that makes some difference in our trading. Thank you for watching. Let's meet in another video. Till then, take care. Bye bye.